Good morning, good morning. How's everybody doing today on this wonderful Friday morning, 10 o'clock in the morning, June 24th, 2022. Glad you guys can make it with me today. Looks like you guys fell short of hitting 30 likes on the tweet. That's too bad. It's too bad. I had something good that I wanted to share with you, but I gotta stick to my word. So I'll be sharing some good stuff with you nonetheless. So what I wanted to do was I wanted to take a look at what took place this week. Because as we were pointing out earlier this week, and hopefully you guys got the newsletter sent to you guys. If you haven't signed up for the newsletter, make sure you do. Okay, just come to whiteoakfx.com. Scroll down to the bottom of the page and right here, okay? Sign up for free and become an insider with our newsletter, okay? It's the hottest newsletter in town. You're going to get insights from the market that you won't find anywhere, plain and simple. No hype, just reality. All right, so take a look at what's been going on here. Look at the SPY. Look at the massive move that we're having, okay? You see the arrow that I drew up here on the 2-hour chart? This is what the forecast was, okay? Back at the beginning of the week, was that price was going to move up towards this target, which we're just about to hit. All right? Did we use a crystal ball to locate this this move? To forecast this move? Did we use a crystal ball? No, I think it was pretty clear when we started looking at the news and we started seeing all this news about the market dropping. Okay? It was very, very negative news. Okay? All the headlines were very bearish. And some of the analysts for the big banks, they were coming out and saying, yeah, now would be a good time to sell stocks. And I mean, when I heard that, I said to myself, wow, they're really getting people excited now to short, and the market's probably going to rally. Likely, just based on that. Now, there were, some indications that a rally was going to form here on the SPY, just by looking at the technicals. We were doing analysis last week on what was taking place here on the charts, and discovered that it was likely, and I think on Monday as well, that it was very likely price was going to be going up this week. So there we go. We have our target reached. So, but then we wanted to take a look at the news and see what the media was saying, because what we've learned is that the media is always, they're always shaping the minds of investors and traders. They're always trying to lead them down a certain way of thinking without making it too obvious that they're trying to lead them down a certain way. And so obviously at the beginning of this week, we can see by the headlines that they were very, but by the article that they were very bearish, okay? Very bearish. If you look at the wording that they use and how they phrase their sentences and paragraphs, you'll recognize that there's this common theme with all the headlines, with all these articles. And it was that we should be expecting stocks to drop. And there was a ton of articles that I had posted, and I shared some of them on the Telegram channel about how all of a sudden, remember when we were here? Okay, let me show you something. Let me show you something. When we were here, we were telling our members the market is in a downtrend, and we share that with you too here on the public channel. But we went into a lot more in-depth analysis with members. Down here, we were in a downtrend, and the media said, "Oh, the market just tiptoed into a bearish territory, but now it's not into a bearish territory." Why was that? Again, it was to get people excited about buying the market all throughout here. Why do they want them to buy the market all throughout there? Because that's exactly where they were about to turn the market down and short it right here. This was all the selling. And we got into a short position up at that high. Okay. And we rode the wave to the downside. And so now price dropped all the way down here. I mean, we're clearly, majorly in bearish territory now. So when it becomes so obvious that we're in bearish territory, remember all the headlines? Remember what they kept on saying? Once the market drops 20%, then we're in bearish territory. So what do you think they're going to do once the market drops below 20%? You think they're just going to let the market drop even further and allow everybody to jump in? They're not going to do that. So once it was clearly below the 20% drop, they came out with all the headlines saying, yeah, there's no doubt about it now. We're in bearish territory. Yeah, all the experts are saying you should be selling now. Okay? And so where do they say that? Right down here. Right down there. Okay. That's where they say, yeah, it's going to go down. Yeah. We'd be selling the stocks if we were you. Yeah. Very bearish. Looks really bad. And then the market rallies upwards. All right. So that's where things sit right now with respect to the headlines. Again, it's all throughout the newspaper, all these headlines of the weakness in the market and Bitcoin. Oh, now you're talking about Bitcoin not being a good investment. What have they been saying all this time about Bitcoin? Who's been pumping it up constantly over and over again? Right? And this is another one that we've been looking at and discussing, Bitcoin and what we expect from Bitcoin. So now we got the rally that's forming up here in the SPY, finishing the markets pretty aggressively. And if I wasn't busy doing this live session with you, I would be in some short-term options, SPY options. Okay. Options that June 24th. Let's take a look here. June 24th, next Friday is what? The 1st? Let's see what we got here. August 1st. Yeah. Where's price at now? So 390. 390 call option. Okay. Let's see if the data comes up here. It's not loading any information here. It should be. Let's try another date. June. Okay, July 15, 390. Let's see what this one looks like. Attempting to retrieve data. There we go. Here we go. And so when did we call this move? It was June 20th. June 20th, where was price action here? $3.40. SPY, July 15, 2022, 390 call option. This option you could have bought at $3.40, $3.50. Look where it's at today. $7.95. How about them apples? Double your money in a week. Not bad, huh? Not bad. Double your money in a week. All right. So, perfect trade, outlined before it took place, gave you the reasons why it was going to take place. The odds of it were high that it was going to move up like this. The technicals were saying it. The media was telling you it. And that's the move that we got. So I didn't take that trade, just to let you know, because I've been busy doing other things. But today I would have taken that trade. I would have taken this one long. If I wasn't busy doing this with you guys, I'd be going long, because I still believe that there's going to be more strength for the rest of the day. We're gonna close strong. And then, you know, how the media is going to spin it, who knows how they're going to do that. But you see what we were pointing out here on the 2-hour chart, okay, about the range. I said, here's your range, folks. Here's the range. And price should break out to the upside. Look at here, look at here, look at here. And then you see when it broke out of the range, you see the amount of pressure, okay? I'm not drawing these ranges out of nowhere. I'm not drawing these rectangles out of nowhere. They're for a reason. Because these are the exact areas that price would have stayed in if it was going to stay in this range longer. This was the actual range area. All right, so let's take a look. NASDAQ, you know, we've got a nice strong rally as well. NASDAQ has been weaker than the SPY. And if we take a look at the US 30, the Dow, it's pretty much on par with what's happening with the SPY right now. You can see that overlay, that orange line on top of the charts. That's the S&P on top of that. And then we got, let's see, which chart is this? The Russel 2000, which since the beginning of the year has been underperforming. Okay. So what's going to happen next week? That's the big question, right? Okay, so we forecasted this week to a T, to perfection, and you could have doubled your money. Okay? But this week's over now. So what's going to happen next week? So from what I'm seeing, you know, this has opened up for a bigger move to the upside. Okay. If I look at the daily chart, I could see this easily happen next week, and then this, okay, over the next following weeks. The chart has now opened up for a move like this. So over time, a move higher is easily able to take place, but you got to be careful because you know what took place over the last couple of weeks is a big breakdown of an institutional area of buying. So that has opened up the floodgates for a move even lower. So at what point are they going to stop the rally to the upside to turn price over to the downside? So that's what we're going to be watching for next week and the week after that, is for that turning point, because this strength in the markets, we don't think it's going to be sustainable for a long period of time. They'll sustain it for a while, but then they'll start to turn price over to the downside. Okay, so what am I going to be preparing for? Well, what I'm looking for are stocks in weak sectors that have been underperforming the market and taking advantage of this strength that we're getting so that I can open up short positions on those charts when the market decides that it wants to turn down. So there's a great website here, and it's called Sectorspdr.com. It was given to me by a member, and it's pretty useful. So what I've done is, you know, we'd look at the S&P, and you can see that the beginning of the year was the beginning of the drop of the markets, right? January 5th, you can see that's when the market dropped. And we're in June. So basically 6 months since the market reached the top and started dropping. So what I did was I went to the sector overview. Okay, you click on tools, you go to sector tracker, and I clicked on sector overview, and I clicked on 6 months. And now this is giving me all the sectors and how they've performed. Okay. Obviously, energy is the big one. Why? Because oil's been going up. All right. So the energy sector has been very strong. So I don't want to go short something that's been very strong, right? I want to go short something that I believe is going to continue being weaker. So what kind of markets do we have that, you know, we should be expecting to continue getting weaker going forward? What would you guys say? I want to hear from you. You've got the chat. You're here in the room with me. And give me some of your ideas. What do you think will continue being weaker in the months ahead of us? Just think about what's going on. Inflation increases, cost of goods are going up, cost of gas is going up, buying products is getting more expensive. So what would people typically be spending money on if the cost of living wasn't so high? What would people be spending money on? What do you guys think? XLY, consumer discretionary. Yeah. So if you look at consumer discretionary crypto market, yeah. Exactly. Yeah. So the stuff that they wouldn't necessarily need to be buying, okay? I think Dollar General might get stronger. And if you look here, you can see that those ones have been strong, okay? Isn't that interesting? Isn't that neat? So you click on consumer discretionary, and it lists you the top companies, okay? The top companies are there. And so when you look at the ones that are doing well within the sector that's not doing well, you know, they are the products that people absolutely need. Beauty products, women need it. AutoZone, guys need their car parts. And Dollar General stuff, okay? Cheap goods, cheap items, okay? So you can go through this list. It's really nice. You can go through this list and you can look through, okay, what's like the lowest? Etsy. Whoa. Etsy's the lowest. So people are like, you know what? I don't need to buy stuff off of Etsy. So I think to myself, I'm like, okay, people don't want to be buying off Etsy right now. I get it. So let's take a look at their charts. Are their charts something that I'd like to trade? And from what I'm seeing here, I'm not seeing anything tradable when it comes to Etsy. So I would pass on Etsy. Okay. Then I look at Carnival Group, Royal Caribbean, and I think to myself, how are they doing? Well, they just lifted a lot of the restrictions on COVID, especially here in Canada, where we can actually fly and leave the country now. Isn't that amazing after 2 and something years? So I think that, you know, that will be kind of a risky one. I don't know if I'd want to go with the Royal Caribbeans because I think that there's a chance that, you know, these stocks can go higher, okay, from where we're at. And so I look at the chart and I say to myself, do I see anything clear that I would want to take advantage here on the charts? And I don't, not on the Royal Caribbean chart, okay? I also look at Carnival, and here as well, it's already made a significant drop. So I don't see anything that I like there. So I'll move a little bit higher. And now I see this one here. Expedia Group. Huh. I'm like, okay. People booking vacations. I like that. What does that look like? Expedia. And I look at the chart and I think to myself, this looks juicy. This looks juicy. I like this big drop that we got recently. It looks really, really good. Okay. So this might be one that I'm interested in taking. Yes, some COVID restrictions have lifted and so forth, but I think that, you know, there might be a very good chance that over the next 6 months, 4 months, 3 months, that people are going to start thinking to themselves, you know what, with the cost of living going up, maybe we should just sit it out. Maybe we should just stay home for the summer and see how things progress, and then we'll decide what to do in the winter. So, you know, we might see a big slowdown in traveling over the next 6 months. That's just my thoughts. So I'm looking at the chart and I'm thinking to myself, okay, we're getting a pretty decent rally right now in the market because of what's happening with the SPY. And if you take a look at where price is right now here, I have a green area that I drew on the chart. Why did I draw this green area? Because this is an area where I believed institutions would come in and start buying. Okay. And as we can see, that is what's taking place. So I look up in price and I see this major imbalance here, a major imbalance. So it seems to me that the last time the institutions came in and really sold this stock with a great amount of selling was up in this area here. So this area will be of interest to me, because if price does manage to rally up there, I mean, that's quite a significant rally from 100 to 130. I don't know if it will be able to do that. I mean, it is possible considering what we're seeing with the SPY. All right. It's definitely possible that it rallies up to there. So if it was to rally up there, here is an area that I would be interested in engaging in short positions on this one. Okay. So we'll see. It's on my list. Okay. What other companies do you think would be good? Paul writes, interesting how LKQ is down when AutoZone is up. LKQ Corporation. What are they? I don't even know them. LKQ Corporation. Interesting. Look who owns them. Distributes replacement parts, components, and systems used in the repair and maintenance of vehicles. It operates through 3 segments: North America, Europe, and specialty. Oh, interesting. And what is the other one? AutoZone? AutoZone. Gosh, they've got their hands in everything, don't they? They've got their hands in everything. AutoZone. Let's see what their stock looks like. Oops, I clicked on the wrong one. Let's see. What just happened? AutoZone, baby. Come on. There we go. AutoZone. Yeah, very strong, isn't it? Well, everybody needs cars. They sell new aftermarket parts too? Okay. You are the expert. I trust you. So yeah, this looks very strong. Look at that. Okay. AutoZone. It's not the cleanest type of chart, not the type of chart that I'd like to trade. But yeah, it's definitely there. So there's a bunch of different companies. Norwegian Cruise Lines, Ford Motor Company, MGM Resorts. I wonder what they look like, MGM. Okay. Yeah, this looks ready for a further drop from what I'm seeing. Yep. Same thing similar to Expedia. You see this area here? I'd be interested. If price got to this area here, 36s, 34s, I'd be looking for momentum to turn over to the downside. Yeah, it looks pretty good. Okay, that looks pretty good. Well, so that's a great way to take advantage of what we have in the markets right now, because we definitely have weakness that's about to come in like really aggressively. You know, the SPY is strong today, but over time it's not going to be. Over the longer period of time, we're suspecting that we're going to be seeing a lot more weakness. So the weak sectors, look for the weak performers. You don't want the overly weak performers, because the overly weak performers, they probably already made their moves. You know, a lot of them have already made their significant moves. So you don't want to be getting in short into something that's already made their significant moves. You want to think about where we are, what kind of companies have already come out with poor earnings, but which ones are about to be hit because of the increases in prices? Which ones haven't fully shown the damage from inflation, but should be in the next 6 months or so. Those are the ones that, excuse me, those are the ones that I'd be focused on. So let's see here. Are there any other ones here? Chipotle Mexican Grill, Home Depot. I think Home Depot is pretty good. Starbucks, Target, eBay. eBay might be another one, like Etsy. Let's see if this one already made a move. Yeah, we have our targets at lower. And we've talked about this one before. So this one could be a good one as well. Yeah, this one looks like a good one as well. eBay on the list. Let me make sure I put it on my watch. Oh, it is on my watch list already. Okay, good. Yeah, eBay. I like this one. Rallying up. Once the market decides that it wants to make its final descent with strong momentum, this one will be good to jump on board. Okay. Any questions with what we've covered so far? Interesting that Nike is on the list there, considering they are promoting a new Jordan shoe. Well, yeah, they're on the list here because they're the big companies. That's what they're listing here, is the big companies. Nike's there, minus 34%. Ross Stores, Home Depot. I think Home Depot, I was checking that one out yesterday. That one looks okay. Yeah, a little tough situation. I do believe there's going to be more downside with this one as well. Yeah, this one looks good. But eBay looks better, in my opinion. eBay looks like it has more to go. So I'd be looking up in the 47 area, 47, 48, 49 area for momentum to shift to the downside. That's what I think. Okay. So again, great website. Great website. And, you know, after in the future, when the SPY bottoms, when the markets bottom and they hit demand and the institutions come back in to start buying up, because that's what's going to happen. Guaranteed, 100%. That's what's going to happen. They're going to push it down to pre-pandemic levels. They're going to contact areas of buying and areas where they were interested in buying before, and they're going to start buying again. So when we get to that point, we'll have to take a look at, you know, what sectors are going to start doing well at that point. Okay. So we'll look at we could look at what sectors are doing well, what they're starting to do well. You know, we'll just watch the market. Once the momentum starts to shift, we can come here. If the momentum has been shifting, if the banks are under a process of shifting momentum, we talk about this in school all the time. If the banks are under a process of shifting momentum, it may take 2 months to shift momentum. It may take 3 months to shift momentum. But what will be interesting is to come to this sector overview and click on 3 months and take a look at what sectors are hot, what sectors are starting to warm up. Okay. Because then what we'll do is we'll see which ones are starting to warm up during that momentum shift. Because remember, the bankers, the institutions will be coming in and buying in those sectors majorly, because they know those are the ones that are going to be the biggest ones to start the rally. So they are going to be the ones that they're going to start initially purchasing. So it should represent itself here on this chart. When we click on 3 months, we'll start to see which sectors. And I think it'll probably become very evident which sectors are going to be the hot ones. And then we'll come here and we'll look at which companies are the biggest ones. And whatever ones are the hottest, we look at the charts and we'll take part in those charts to the upside. So that's going to be very interesting. I like this tool. It's very neat. I like the fact that you can click on any sector and then boom, on the right hand side, you have the individual stocks for that sector. So really, really looking forward to incorporating this website a lot more into what we do. So yeah, so I'll leave you with that. What are we running? About a half an hour? Yeah, this was a good session. Very, very good session. All right, what do we got here? 22 likes. We only got 22 likes, guys. Come on, we could get up more than that. What's the tweet at right now? 29. Holy smokes. Wow. Just one away. Gosh, you guys did well. I really appreciate it. All right, so we're 31 minutes in. We'll leave it at that. So hopefully you could take that and use it to your benefit. And yeah, that's it. We'll see you in the Telegram channel, and enjoy the rest of your Friday. Take care, everyone.